Crypto warriors, welcome to the Inventor Strategy Selection channel, your beacon for alpha-generating strategies in the wild west of digital assets. Here is the million-dollar paradox. Countless hodlers and moonshot hunters stake their bags on single indicators, only to get wrecked by fake breakouts time and again. A whale-sized trader once got liquidated hard during a market bloodbath until discovering the untapped edge of indicator confluence. Today's VWAP diamond hand strategy is not just another trading system. It is a complete arsenal built on multi-indicator synergy. This setup cuts through market noise like a hot knife through butter and catches early trend reversals while the masses are still asleep. What secret sauce powers this edge? How does it remain rock solid while the crypto market swings like a pendulum on steroids? Time to peel back the layers on this hidden gem. Forget those paper-handed single-moving average strategies. This VWAP powerhouse stacks three distinctive indicators to create a sophisticated filtering matrix. Think of the market as a volatile sea where price action surges unpredictably. Basic indicators are like flimsy nets easily torn by massive waves, but this strategy constructs triple-reinforced barriers that only legitimate bullish or bearish momentum can penetrate. The secret sauce? A dual confirmation protocol, first catching potential trend shifts through EMA crossovers, then leveraging VWAP and SMA as market sentiment validators to ensure you only pull the trigger when genuine trends materialize. The cherry on top is its surgical exit mechanism using hypersensitive short-term EMAs to detect when the trend fuel tank hits empty. Been left holding bags after missing the exit ramp? This system solves that pain point. In crab markets, seasoned whales always hunt for multiple indicator alignments instead of gambling on isolated signals. Precisely the diamond hand philosophy embedded in this strategy's DNA. Parameter selection is the genetic code of any trading algorithm. It shapes the strategy's DNA and battle temperament. This system's architecture reveals some big brain design choices hiding in plain sight. Entry triggers come from crossovers between medium and longer-term EMAs, not the typical short-long combo most retail traders blindly follow. That is tactical genius right there. Quant wizards discovered during backtest optimizations that too short cycles generate signal noise. That'll wreck your account, while sluggish long periods make you miss the rocket ship entirely. Check this alpha leak. The architect specifically selected prime numbers 17 and 31 for EMA periods. Not random, pure mathematical edge. Prime number periods dodge resonance with typical market cycles that trap the masses in false signals. The exit parameters rock shorter 8 and 9 periods, with that tight spread delivering another strategic edge. Why more sensitive exit triggers? Because hanging on to a dying trend is the fastest way to give back profits. Trend continuation is infinitely more fragile than formation. Meanwhile, the 69-period SMA acts as the macro compass, keeping your trades aligned with the big money flow. Indicator calculations form the backbone of this strategy, the neural network determining how your algorithm responds to market stimuli. This setup deploys a tactical trinity of moving averages, EMA, SMA, and VWAP, each serving a distinct battlefield function. EMA acts as your forward scout, highly reactive to recent price action, and perfect for sniffing out early trend formations before the herd. SMA functions as your steady strategist, smoothing out market noise that trips up impulsive traders. VWAP is your secret weapon, the only indicator in this arsenal tracking smart money flow through volume analysis. A legendary quant shark once revealed that after dissecting thousands of trades, he discovered price-VWAP relationship shifts often telegraph when whales are accumulating or distributing. While this code appears deceptively simple, it is packing multiple dimensions of market intelligence. Unlike cookie-cutter systems using just 2 or 3 averages, this strategy calculates 5 different period mass, a clear attempt to capture alpha across multiple timeframes simultaneously. Why do market movers leverage multi-period analysis instead of single timeframe tunnel vision? Because genuine market trends manifest across different time horizons at once, and signals that align across multiple periods pack the highest probability punch. Strategy conditions are the algorithmic decision engine, the brain dictating exactly when your capital deploys into battle. This system's long criteria implement triple-layered filtering, short-term EMA slicing above long-term EMA, price commanding position above VWAP, and price establishing dominance above long-term SMA. This is not just throwing indicators together. It is strategic checkpoints that market movements must conquer sequentially. The crossover captures momentum ignition while position confirmations verify directional bias. The crypto graveyard is filled with rookie accounts that chased crossovers without position validation, a fatal error that bleeds capital. One battle-hardened crypto veteran revealed that simply by adding position filtering rules, his win rate rocketed nearly 20%, from underwater to consistently profitable. The short conditions deploy mirror image logic, maintaining perfect tactical symmetry. Exit conditions run leaner, relying on swift short-period EMA crossovers, Embodying the veteran's creed, enter cautiously, exit decisively. Why different trigger systems for entries versus exits? Because market dynamics fundamentally transform between trend ignition and exhaustion phases. Smart money designs separate tools for these distinct battlefield conditions. This condition architecture enables the strategy to maintain performance equilibrium across radically different market regimes. The execution module serves as command central for your trading operations, the nerve center controlling capital deployment timing with military precision. This code block implements the full tactical playbook, including position management and market reversal protocols. The system tracks position status using Boolean flags, simple but bulletproof. When long signals flash while you are short, it automatically closes shorts before deploying longs. The inverse happens with short triggers. This rapid reversal capability keeps you in sync with market direction shifts when sentiment flips. One critical detail warrants your attention. Post-signal, the algorithm verifies current position status to prevent duplicate entries, a hallmark of institutional-grade systems. A veteran quant commander once revealed that countless algo systems implode because they mishandle position state tracking, triggering signal loops that bleed accounts dry. Beyond that, the strategy deploys standard exit protocols where positions liquidate without reverse deployment when exit triggers fire without opposing entry confirmation. Consider the strategic depth. Why separate reversal exits from standard exits? This distinction recognizes fundamental differences between trend reversals and temporary exhaustion. When both exit and opposing entry conditions trigger simultaneously, you are likely facing a high-conviction market flip. When only exit conditions trigger, you are likely witnessing trend fatigue rather than reversal. This nuanced approach demonstrates the architect's deep market understanding. The visual architecture deploys tactical color coding and precision line weights to differentiate indicators, letting traders instantly decode market conditions at a glance. Entry EMAs pop in green and blue while strategic cross markers flag critical intersection points, often the earliest warning signals before major trend shifts. Exit indicators stand out in purple spectrum, creating instant visual separation from entry signals. While robust in design, the system could benefit from sound or pop-up alerts to catch opportunities even when you are not glued to the charts. This VWAP architecture displays clear trend following DNA, but packs multiple filtering layers, creating a specialized market fit profile. In powerful directional markets, think early crypto bull runs or major altcoin breakouts, this system captures emerging trends with laser precision and rides them for maximum capital extraction. A legendary trader deployed a similar algorithm during a major crypto upswing, scaling in at market bottoms and scaling out mid-trend, banking serious gains while most traders were still debating entry points. The cardinal sin many commit is deploying this firepower in choppy, range-bound markets. Guaranteed account, bleed through false signal whipsaws. When BTC gets stuck in sideways accumulation zones, moving average crossovers become noise rather than signal. Either slash position sizing or holster the strategy completely. Why such performance divergence across market conditions? It is all about matching your weapon to the battlefield. In inefficient trending markets, price action carries stronger momentum persistence where trend algorithms shine. Inefficient sideways markets, mean reversion forces crush trend strategies mercilessly. Advanced traders customize parameters for specific trading pairs. Volatile low-cap altcoins demand longer EMA periods to filter out shakeout wicks that would trigger false entries. Critical insight, signal reliability multiplies exponentially when price slices through major support-resistance zones, as these technical breaches typically coincide with fundamental sentiment shifts and smart money capital rotation. For maximum edge, pair this with higher time frame trend alignment to supercharge win rates. Breaking down this VWAP system across critical performance metrics reveals its true market potential. On completeness, it delivers solid entry set-exit frameworks and position handling, but lacks automated stop-loss protocols, a significant blind spot that could hurt during black swan events. For risk management, the multi-filter approach successfully screens out noise, but without defined stop placement or position sizing rules, leaving accounts vulnerable during market meltdowns or flash crashes. Adaptability scores average marks since hard-coded parameters require manual adjustment across different market regimes, without self-optimizing capability. Understandability stands as this system's crown jewel. Crystal clear logic and intuitive design principles make it accessible even to traders still cutting their teeth in the market. Innovation ranks underwhelming. essentially stacking conventional indicators without breakthrough methodologies. Practicality shows strong in trending environments but falters in choppy consolidation phases with potential signal overflow. The verdict? This represents a well-constructed trend capture system that serves perfectly as your algorithmic foundation for further customization and enhancement. It outperforms many retail-level indicator strategies with its disciplined signal filtering and rule clarity. While not reinventing the wheel, its methodical approach to trend identification earns it a place in your trading arsenal. Do not forget to smash that like button if this analysis delivered value.